This is Alan Farley from FX Empire. Let's look at three U.S. banks which just reported earnings. First up is J.P. Morgan Chase, which returned to the 2019 high just ahead of Friday's earnings report. It sold off after the report, and it's starting to pull back in this correction, which is kind of overdue after the strong gains since November. As you can see, accumulation is lagging price by a very wide margin, so I expect this gap and this gap to get filled, or perhaps this gap. Now, this gap down here might be a bigger chore, yet it will mark the best trading opportunity because buying down here may precede a very strong recovery and perhaps a breakout later this year. Moving on, let's look at Bank of America. Bank of America crossed the 786 retracement prior to earnings. That's a very good thing because it sets the stage for 100% retracement back up to this high up here, this multi-year high. It also sold off after earnings. It reported about a 10% revenue decline during the quarter compared to last year. So it's pulling back. It's going to need to hold this 786 line right around 32 and needs to hold it as support if it wants to make it all the way back up to 36 and challenge the 2020 high. Finally, moving on to Citigroup. Citigroup is the laggard of the three. Now Citigroup only just crossed the 618 retracement prior to the report. And its report triggered a much stronger sell than these reactions, now trading below the 618. The company revenue dropped about 10% year over year, but its credit loss provisions also skyrocketed compared to last year, showing that its clients are having trouble paying their bills. Now, that isn't a good thing for Citigroup, so I think we could get the moving averages down here, the 50 and the 200-day moving averages tested up in coming sessions.